When you think of social media, do you think that new traders, people trying to become a trader, somebody trying to find consistency, do you think social media is a net positive or a net negative for people trying to become traders?
I think it's a net negative because there are some really good people out there, but unfortunately that they're outweighed by a lot of, I don't know, carnival barkers, for lack of a better term.
Mr. Paul, welcome to the channel. Thanks for stopping by.
Thank you. It's a pleasure to be here.
Yeah, very nice to meet you. Today it's Thursday, so I should ask, how has the week been going for you?
The week's been going well. Very interesting. I mean, these markets are fascinating. You know, from yesterday where no buyer wanted to back away to today where no seller wanted to back away. Again, it's just, to me, it's a reflection of who our competition is, which is short-term traders. You're dealing with retail traders such as myself and algo-driven machine trading.
Interesting. Very interesting. Do you normally trade on Fridays?
I do. I trade every day.
Yeah, trade every day. Very cool. Okay. Well, I'd actually love to circle back around to that topic. And you have a very, your story into trading is something that just is fascinating to me, and I'm excited to hear about it.
Sure.
In terms of trading, maybe we could start with, how would you describe, you've had a long journey in trading, but through to today, how would you describe your approach to the market, your method?
Well, I've definitely changed, especially since I started my own trading room. I used to be more of a trader where I was always a day trader. I did go home with positions once in a while, but for the most part, went home flat. But I did hold longer term during the day. I think being on the microphone, I mean, I'm on the mic from 9:15 to 4 all day with the traders in the room. It's a lot. So I've become more of a scalper because of that. I definitely find myself not staying in trades as long as I used to or should be. Today was a perfect example. Reading the market really well, but not maximizing as much as I should have.
Now, when you say more of a scalping, you don't mean, a few seconds at a time, 50 round turns a day, something like this. Do you just mean cutting your trades a bit shorter, or how many trades are you talking?
It varies, definitely more than I used to take and like to take, because I think the odds go down with the more trades you take. That's for sure. I mean, I used to be a trader that did maybe 4 or 5 trades a day. So if you're right 3 or 4 times, you're good. I'm definitely a lot more than that. The win rate is high. The P&L at times doesn't reflect it, because there are still things that, that haunt me in my past, with sometimes holding on to losers too long. But that's something, again, my room is about educating and informing, not about my trades. So that's something I try to pass on to the traders.
Very good. So your day trade a little more shorter term, a little more frequently nowadays. And are you trading with discretion and profiling, or are you how would you describe the underlying method of how you look at the market?
I am strictly a market profile trader.
Yeah, very good.
I've been using that now. A good friend of mine mentored me back in 2011, sat in his house for almost a full year. He had been trading with the profile since probably 1997. He mentored me, and since I started basically in 2012 on my own behind the screen, I have been 99% of using the market profile.
Yeah, great. Now, the journey from you to even being on the screens and maybe transitioning to that, originally starting off as a specialist in New York, and maybe for all of the meme stock traders and crypto people, the young kids listening to this, could you explain what a specialist is?
Sure. Well, it's night and day from what we do now. So a specialist, I started back on the trading floor in 1983, so even before the computers. And a specialist was assigned a stock, and that specialist basically, so take IBM, for example. If you wanted to trade IBM, your broker came through us, and 95% of IBM's trades went through the specialist. Where the specialist would step in, where there's no public bids or offers, that's where our firm would put up our capital to provide liquidity and dampen volatility and things of that nature. Now, when I first started, we were trading eighths of a dollar, then we went to sixteenths, and then finally pennies. So, I always was like, are we really providing something here? I wasn't an engineer, I wasn't a doctor, but to be quite honest with you, Corbs, watching the Wild West these days with everything that we have going on here, I certainly think that we provided something to our companies and our customers.
Interesting. Now, when you were doing this, in my mind, of all the people involved in finance and just all the people in the world, a very small amount of people are specialists or ever were specialists. Was it something that in the time of you doing this, was it a super competitive thing that only a few people got to actually do? Or was it more like a niche thing that maybe there wasn't as big of a draw for? What was it like getting started as a specialist?
Well, without a doubt, it was not easy getting in the door. You had to know somebody back in those times. My wife, she was my girlfriend at the time. Her sister was actually working for a specialist firm, and I was working in Cowan's back office, and I hated it. And she didn't like it down there. So that's how I got down there. It was incredibly competitive. There was a lot of nepotism down there. My first firm was a very small firm, and there was a lot of sons in that firm. So it took me a while to get my specialist badge. As the years went by, we would have trading assistants that didn't get a badge in a year, and they'd be like, "Oh, what's going on?" I waited 8 years because we only had 10 brokers 10 specialists in my first firm. And we had 20 trading assistants, which I was one of. You had to prove yourself, and a spot had to open up. So definitely it was a very competitive environment. There were also about 64, 65 specialist firms when I first started. When I left the trading floor at the end of 2007, there were 4.
Wow.
It just all went electronic, obviously.
Yeah, very interesting. Now, so was your day-to-day job mostly come in, and then did you have a company, a stock that you were assigned to? Or how did that work?
Well, that's a great question. It depended on how busy the stock was. So there's somebody like, remember Compact Computer? So Compact Computer was the big hot stock back in those days.
Okay.
It rivaled IBM. Right now it's a nothing. Sure. Apple was nothing back then. Compact was huge. So my specialist just traded Compact Computer because it's just too busy to handle other stocks. If you had other stocks that weren't that busy, you would trade 5 or 6. So when I was a specialist, I handled anywhere between like 5 and 7 stocks at one time. There was no profiling on the floor. Yes, we were looking at charts, but you had to make bids and offers. It didn't matter what the chart was telling you. If there were 10 sellers coming into, I used to trade Bell South, was one of my big stocks, one of the baby bells. If there were 10 sellers coming at me, I couldn't say, wait, let me check out what the chart's telling me. I still had to make bids. So it didn't matter. So we were really trading off of instinct and gut rather than charts or anything as a specialist at that time.
Did you have was part of even like your workflow getting a message that some broker needed to fill this many orders, and then there was no real thought about it? You just went out there and accomplished that? Was that part of what you did?
Well, they would come to me. So the trading floor was set up with the trading post. The specialist stayed in one spot. Yeah. So it would be like a little storefront. So above me would be all the stocks listed that I traded. So if somebody wanted to trade Bell South, they came to me. If somebody wanted to trade Conoco, the oil company, I had that also. They came to me. So I'd be getting hit from all sides, from Morgan Stanley, JP Morgan, Goldman Sachs, coming in with buy and sell orders in all these stocks. Also, they'd be coming through our computers too at that time. So you were trading off a computer and also handling the trading crowd, which was one of my favorite parts. It felt like you were a conductor when the market was really busy on an earnings day or some kind of downgrade. You were dealing with 20, 30 people in the trading crowd. And it was great. It was something I would never have given up in my life to give that back.
Yeah, I can only imagine what an environment and what an energy and what that must have been like. And just truly the end of an era of, we'll never see that again. But very interesting.
No.
I could probably sit here and just ask you questions about that all night, but we'll move on so we don't get too bogged down. But very cool. Now you had to transition from there, and you said when you left, there was only a few even, still around. Your transition, was it something that like, okay, this is all done, we have to change over, or was it something you decided to get out of initially, or was it just, hey, this is done now?
Well, the writing was on the wall. It was towards the end of 2007. I was down there for 25 years. I was 47 years old, and I was one of the oldest people in my firm.
Wow.
And they were already, Goldman Sachs had bought my firm, Spiel, Leeds and Kellogg, and we knew layoff. They were systematically starting to lay off people because they knew machines were taking over. So I had a choice to make. Would what they're offering at the end of 2007 be the same as in 2008? So I finally said in 2007, you know what? I'm out of there. I mean, I would have loved to have stayed another 5 years or so, with the kind of years we had between say 96 and 05, 06 and 07 were incredibly tedious clubs. It was horrible because it was just so tough because the machines were running everything. It was just totally different from what we were trained to do. So that's, it was a decision I made on my own to finally get out of there. I wasn't, I'm not ready to retire now. I wasn't ready. I was 47 with 3 daughters. So there's no way I was walking out to say, okay, I'm done.
Yeah. Okay. Well, I was actually interested with when you transitioned out of that, because even 25 years into it, this had to be kind of like a mountain of just like actually, I'm curious of what your thoughts were of transitioning to the screens, if this seemed like kind of an easy thing for you or very similar to what you were doing, or if it was like a whole new world you needed to conquer. What was the transition like? Did you take some time off and think about maybe just doing something else, or did you kind of, start immediately trying to find your way into the screens? And I don't want to throw too many questions on you, but did you do this like solo, or were there groups of people that you knew already doing this that you kind of joined up with?
Well, I left the end of 07, 08. I decompressed, didn't do anything. Hung out with my girls. We did a lot of traveling that year. My oldest daughter was studying abroad. So we went over to Italy. So decompressed in 08. So I missed that whole downturn in 08, 09, believe it or not. I didn't trade at all during that. 09, a friend of mine was running for governor of New Jersey, so I helped him on his campaign. So that's what I did for those 2 years, but I always wanted to trade. So 2010, I decided to sit in front of the screen, and I thought I was still a specialist, and I got killed. I didn't have to buy when the market was going down. I didn't have to sell when the market was going up. But after doing that for 25 years, it was hard to adapt. And most people from the trading floor, especially specialists, found that, same issues. And the majority didn't survive. I was doing it on my own. There were a lot of people that were doing it together. I did it on my own. And then finally, that's when my friend, in 2011, sitting on the beach with him one day at his beach house, I said, something's got to change here. So I said, I've never used the market profile. I've heard about it. I have great interest in it. I read Dalton's books and everything. And so he said, well, why don't you come to my house? We would live 2-3 miles apart. So then that's what I did in 2011, which really changed everything around.
Yeah, very good. When you think about the people that were specialists and these things, are you kind of like a very rare for somebody to be able to transition out of that and go to the screens? And when you think about the people maybe you used to be a specialist with, are a lot of them traders now, or do they kind of hang it up or go do something else?
Most have done something else. The only reason I think I survived is because I learned and adapted and got very proficient using the profile.
Yeah. Very
absolutely. The majority, I would say 95% of people that I know that were trading or attempted to trade no longer do it.
Yeah, it's very inspiring to hear, because it's incredibly difficult to unwire stuff that you've been doing for so long. And as we get older in life, it's just more and more difficult. So at that stage in your career, to make such a drastic pivot, I understand why very few people have done it. So very interesting and very inspiring to hear. Can I ask, what is Camelback trading? So
I had been trading by myself for all those years. And then I started, I'm very, very not tech savvy. So, but I started doing some videos, putting them on Facebook, this and that, trying to just, give my feeling and, with the market in the morning. And then again, after the close, somebody ended up seeing me on Twitter, some gentleman that lived in Canada that used to deal with SPECULATORS, my old firm. And he invited me to join the trading room. And I was in that trading room for about a year. Not a very good environment and stuff. So I decided to leave it and start my own. I'm like, you know what? I always liked trading by myself, but I think I have a lot to offer people. I was very fortunate in all my years on Wall Street, the people who mentored me. So I'd like to give back. And I started Camelback trading. Camelback is in reference to I'm Lebanese. So being on the trading floor back in the day, there was nothing known as politically incorrect back then. Everybody took fair shots. Nobody had a thin skin. So somebody had given me a camel, put it by my trading post, and it stuck with. I still have the camel here in my office, and so I decided to come up with Camelback trading, and that's how I started my trading with that name.
Okay. Back when people weren't so thin-skinned, simpler times. Back when life was simple.
Absolutely.
Could you walk us through just a day in the life, like a normal day from, let's say, the time you get up to anything you do before you start trading, what the trading day looks like for you, and then if there's any kind of post activities, end of day ritual that you do when you're done trading?
Okay. I've always been an early riser. I've been off the trading floor for 16 years. I'm still up every day around 5:45, 6 o'clock. It's just habit. I come down, have a cup of coffee, turn my machines on, see what's going on. I don't trade overnight. I only traded futures for about a year and a half now. I was always an equities guy, and then I traded the SPY options when SPY got ridiculously expensive. I wish I started trading futures a lot longer ago. They're much cleaner and much better. But I still don't even, I have no interest in trading overnight. To me, regular trading hours is more than enough. It's not in weekend traders as far as I'm concerned. So I get up, look at the screens, start looking at my charts. I'm big with charts also. I'm always breaking down the monthly, weekly, daily to see what's happening. I'm usually looking at three, the NASDAQ, S&P, and righty. Thank you very much. So I do that in the morning. Then I always do my homework. I always write a little synopsis. What are we looking at? I'm always giving two sides of the market. This can happen if this happens, or if this happens, the bull bear scenario. Then I will do my video. I did my video this morning. The headline of my video is this morning was, does the NVIDIA euphoria last, or will reality set in by some point today with with Powell speaking tomorrow? Well, obviously we know what happened today. So reality set in real quick today.
I got a real strong dose of reality today, didn't we?
Real strong. So I do the video. By 9:15, I'm on the microphone, and I'm giving the breakdown to my trading room, what I'm looking on both sides of the market today. So I'll use today as an example. I said we've pulled back a lot from the overnight high. I said gaps have not held this year. And I keep stats on all that. Upside gaps have held 23% of the time, downside 25%. They don't hold. There was no way I thought this gap would hold once we got the overnight low. That's incredibly important to me, the overnights, because once you get one, the odds of getting the other one go down dramatically. So once that happened today, I was telling the room right before it opened, if we get the overnight low, the gap's going to fill. I said any acceptance back inside yesterday's value, and buyers are going to start giving it up. So that's how my day is starting. Sometimes I'll trade right away. Sometimes I won't. I did trade right away today. I shorted the market basically the entire day today. So I'm trading throughout the day. I'm giving what I think the market's going to do to the trading room throughout the day. And it's not like we're saying, after the fact this happened, and we can go over the day today if you want at some point on the profile to show you what I was showing people before it happened and why I thought this market still had some decent downside to it. So that's what I'm doing during the day. After the day, I do my video. Those videos help me too. They reinforce. I'm not just talking to the people who watch my videos. I'm talking to myself also. I'm reinforcing what happened today, what didn't happen today. And then sometimes I do consultations too afterwards. So they're long days, but I enjoy it. I still have a real big passion for it.
Yeah, very good. Okay, so when you just to kind of recap, you grab a coffee and then pretty much just kind of straight into it. You don't really, kind of meditation, nothing like this. You just kind of grab your coffee and start up.
No, I will. What relaxes me? I sit outside. So after I look what the market's doing, do all my prep work. I have my set thing in front of me. I'm always looking. I have 3 destinations to the upside and downside right off the bat to start the day. What my targets will be if the market goes here or here. I'm always in my head. What is the monthly, weekly, and daily chart telling me? What is the overnight inventory? Is it long or short? That's really important to me. Where's value going to build today? Well, we knew value was building higher today, but once they gave up the gap, once they gave up the overnight low, we knew value was going to come in. Did I expect it to go almost lower on the day? No, but we knew. I knew it was going to change drastically. The opening, and these are all things I look at while I'm sitting here prior to getting in my trading room. The opening is very important to me. I think whoever wins the opening generally wins the day. So as a specialist, when we opened a stock, if it constantly went back and forth through the opening, that was a fair opening for buyers and sellers. That doesn't happen in electronic markets anymore. Okay, so a lot of times the market will open, and if it's going back and forth, to me, that's a lack of conviction now. But eventually, one side will win it. And once they do, right, then that's the side you want to be on. Who am I competing against? Is it short-term players? Is it long-term players? I think the majority of the time we trade, it's against short-term players in the indices. Now, that's a big difference if you trade individual stocks, like with NVIDIA. You know, when NVIDIA earnings come out and the market spikes up and does 2-3 times the volume, those are big-time players that got caught underweight and they had to get in. But with the indices, I think a lot of times, especially in the futures, in the ES and the NQ, you're dealing with short-term traders, I think. So all these things, you want me to keep going on what I look at?
Yeah, well, actually, but maybe so we don't get too cluttered, I would like
Sure.
maybe just pick one of those and ask a question about it. Specifically, when you say winning the open is very important to you, and it is to me as well. When you're looking at it and the open is happening, you're watching price trade, what are you looking for that tells you the shorts have won the open? Or, you know, this obviously, I think if there's not much conviction, we're batting around it, that would be obvious. But is there a certain amount of time, or is there a certain amount of direction, or what exactly cues you into the idea that the open is no longer up for grabs? Somebody won it. And what does that look like?
Well, it does vary. Sometimes it can be 3-4 time frames. We're going back and forth through it. Today was a fairly quick assessment that the sellers won the opening. We opened, came down, took the overnight low, got the gap. So on normal, unlike on a day, I mean, these days are rare, these trend days, right? Trend days are rare. On days where you're not trend, what do we look for to see who wins the opening? Well, we look for one time framing. It doesn't mean we're going to have a trend day, but you know, do we one time frame down? Do we get the initial balance high low right away? I have a checklist sheet that I use. It's like 10 things on it. It's gap, value, overnight low or high, if the point of control is being raised or lowered, things of that nature. The indices, are the indices in favor of one side? If we're only up 0.2% or down 0.2%, well, then the odds of that opening going back and forth are good. But once we started going down today, and you know, you're down 0.6, 0.7%, we're not going back to that open. It's on varying days. On a day like today, it's easy. On other days, I look for one-time framing. I look to see if we get the overnight low or overnight high, you know, whichever one is, you know, if we get the overnight low and the opening is obviously above us, well, then that's a big feather in the cap for the sellers. And I think I would be shorting against the open until they prove me wrong.
Very good. Can I ask you this? When you think about trading, when you sit down at the screens, do you have a certain type of, I guess I would say, worldview or like a paradigm of, you think of what you're doing as like a puzzle that needs to be solved? Do you think about it like you're stepping into a financial warfare that's very dangerous? Do you think about it like it's a game? Do you have a kind of an underlying principled thought that you have when you think of trading?
I do. I think I look at it as an art, right? To me, trading is not a science; it's an art. So every day, as soon as this market opens and the profile starts forming, the canvas is starting to be painted on. That's exactly how I look at it. I think I'm a little different than a lot of profile traders. I'm more of I dig deep into the intraday. I think a lot of profile traders see a bigger picture, you know, weekly, monthly, or you know, past values and high volume nodes. I'm very, very deep into intraday. I think I read it very well, and that's why I think seeing it form its picture every day like that gives me the ability to for me and to tell my room what I, you know, with good odds, what I think the market is planning on doing, even before it happens, because it's setting up. I mean, there's so many. It's like a spoke on a wheel, and there's 20 spokes, and all that market generated information is on there. And when one side is really skewed, then you got to be on that side. When it's mixed and there's mixed MGI, well, then you either step away and don't do anything, or you look for rotational days. You know, I tell no trade is a trade also, right? It's the money you keep, not the money you make. I know these are all sayings everybody's heard, but nobody really, I think, digs deep into them. One of my favorite ones, Corbs, is I like to make believe I'm a lion waiting in the tall grass and waiting for my prey to come by me. I don't want to be running all over the Serengeti trying to catch something.
Yeah,
let it come to you, and that's what I try to focus on.
Looking at your trading, looking at the markets as an art, you being the artist, I guess it's a very beautiful way to say it. I really like that a lot. When you look at your trading right now, do you have is there a certain kind of mindset or a certain approach to trading, a certain approach of being a specialist that you feel like helps you get what we're doing here as traders? Or have things changed so drastically, it's nothing really transferred over from those days?
Nothing's transferred over. No, it's all
Really?
gone. Nothing.
Wow, that's fascinating.
Unfortunately, but nothing.
Yeah.
Yeah, there is. You wore many hats back then. I had to please my companies. I had to please my firm. I had to please my customers that came in with their orders. And I had to please the exchange because I had rules I had to go by, for each different stock to make a market in. So you wore many hats there. It is none of that comes into play here. Unfortunately, none of it does. No.
Looking over the years, even from all of the time as a specialist of watching the, let's say, price, and of all the years that you've been sitting in front of the screens now, do you think that the markets over this time have just changed very dramatically? Or do you think that there's cycles that everything kind of goes through, where if you haven't seen a bunch of them, they seem like everything gets chaotic from, differently chaotic? Or do you feel like, yeah, the markets are drastically changing over the years?
I mean, I think there's still cycles. The market, inevitably, it always gets to where it wants to go. But I think it has changed dramatically in the sense that, number one, we have leaders in government that will never let this market reach its own equilibrium on its own. Right. But that was even when I was a specialist. During the crash of '87, the next day they were cutting rates. They were feeding money to companies and stuff. So it's been happening forever. It just seems like it's happening on a bigger scale now. So that's number one. Number two, with all there's no risk in trading anymore for a lot of these people. There's no commissions. You're trading in pennies. So it has changed dramatically in that sense. I think it has changed. Oh, I know it. This is what it is. I'm never going to be faster than an algorithm. Never. And it's always going to change, right? Just wait till AI starts really getting involved in trading. So I still think I have one advantage, and that's to try to be smarter and try to read the market on an intraday basis. And I think I do that very well. That's the only advantage I have. I'm never going to be faster. I don't have to be faster. If I think what I'm looking at is going to happen, well, I'm prepared to take that trade at that point then. Whether I have my order in or as soon as it gets to that level, I'm jumping in. So that's a huge difference that it's going to make traders survive or not.
Yep, very well said. When I make the statement or when you hear the words market manipulation, what do you think of?
I don't buy it. I really don't. I mean, so many people. The one thing I've always told myself and my traders: don't blame anybody else but yourself. For anything. Believe me, I got caught in many a Trump tweet. Okay? It's not his fault. It was my fault. I didn't have a stop in or whatever. The same thing, like, the market goes down like yesterday. Market went up, we have a trend day, and then today they take it back, and people like in the room are like, oh, that's just ridiculous, this and that. I'm like, it's not really. You're dealing with, see, this is one thing that I have an advantage of, or I could see better than a lot of people. Back in the day, it was only long-term plays we dealt with. It was only long-term money that was in the market. There was no day trading.
Interesting.
So when you had a trend day down, and again, I didn't even know what a trend day was as a specialist, right? We were just market makers. If one day you have a stock that's down $5 because for whatever reason, and it was long-term money selling it, that stock's not going back up $5 the next day. It's going to go down again for the next 2, 3, 4 days until the selling exhausts itself. That's not the case now. I like to call these walking dead algos. They go one way, right? You bang on a drum, and then they all turn around and go the other way. They're very fragile traders. There's no loyalty. They don't care. And yesterday and today are a beautiful example of that.
Very interesting. When you think of social media, do you think that new traders, people trying to become a trader, somebody trying to find consistency, do you think social media is a net positive or a net negative for people trying to become traders?
I think it's a net negative because there are some really good people out there, but unfortunately that they're outweighed by a lot of, I don't know, carnival barkers, for lack of a better term. If you find some right people, then it's definitely a net benefit. But I think most traders don't want to be educated. That's a problem. Most people just want to be told to buy or sell, and that's not how it works. So a lot of traders go looking for that, and that's like walking into a dark alley. You want to find somebody who's going to give you both sides of the market and try to educate you. So eventually, you learn to do it yourself. So I think it's a net negative because I think there's just too many people out there that aren't truthful. And they hurt most people like that. A lot of people in my room have said, "Oh, I've tried so many people, spent thousands of dollars. I charge these people $30 a month because I want to get paid for my time, but I want to give back, and I think I offer a lot for that."
Do you monitor the VIX at all?
No, not really. I think it's I'm as vanilla as it is as they are out there. I'm not big with any kind of indicators. I don't follow the VIX much. I don't do RSI, Bollinger Bands, this, that. I think the profile is going to tell me any of those things. And something, if I'm looking at the VIX or something else and it's not confirming what the profiles tell me, well, something's wrong there then. Right? So I'm like, I'd rather, when something's going to change, we know it. So and a lot of times we see V-shaped recoveries. So I tell my room, look, when something changes, we'll know it. So they go, well, how do you know? Well, I go, well, there's very basic steps. Step number one is to stop one-time framing. If the market's going down, once you stop one-time framing, something changed. So if the VIX was, it was active and stuff, and the VIX was going up, now all of a sudden the VIX is coming back in and stuff. Well, you know what? I'm going to know that because the market just stopped one-time framing. The volatility is decreasing.
Sure. So,
and I tell people, you use whatever you want. You shine, if it works for you, shine it up and go with it. The only thing I tell people is try not to use too much, because then we talk about paralysis by analysis, right? So I'm not knocking anything anybody uses at all. A lot of people in my room use a ton of stuff, and they're very good, but I keep it simple.
Yeah. It's an interesting, dangerous thing about markets, to where it's either going up or down, and whatever you want to slap on your chart will work sometime.
Absolutely.
And it's very easy to feel a certain loyalty because this RSI helped you make this one trade, and you will completely forget the 30 times it kept you out of a trade or it was wrong about it.
Right.
And I find this a lot on the journey of trading. There just gets a lot of clutter, and we have these little loyalties to things we just don't need. And I myself had to go through a process of just stripping everything down to nothing but the profile, and then slowly incorporating in a few, additional things. No lagging indicators though, myself either. Trading from a profiling perspective, and even thinking of it as an art, this is, leaning more on the side of making discretionary decisions, not just buying and selling because lines cross or something like this. How do you strike that balance of rules in place so that you're not just, all over the place, but having that freedom to trade what you're seeing and to be discretionary? So
I look at a lot of different things during the day. In the first time frame, it's generally at targets I have set. So if, like I told you, I put 3 upside destinations, 3 downside. Well, if the market starts going up and value's higher, and now my targets are in sight and I take a long, that's what I'm using 2A period, because it's strictly the market still forming. I don't know what it really wants to do yet. But as the day evolves and the profile is evolving, I'm going to be looking for different things in the profile that's going to tell me where I want to get involved. If we go trend, certainly going to be selling any kind of, I like to call it the ebb and flow trade. It's like the ocean, right? The tide going in and out. On a day like today, when the market started going down, any push up was worth the short. Now, I have a good feel for it. I've been doing it a long time. So some people in my room are like, well, I should, whatever price I shorted, and I shorted it and it came in 4 points. They're like, how did you know that? I go, I don't know that. I go, it's just the ebb and flow. I'm trying to mitigate my risk. So if if B period's low is 30 and now we're going down and now I short 25, I know if we start getting back up to that 30 level and don't have a trend day in single prints, well, then that short might not be the thing to do anymore. But they have to prove it to me, right? I'm a very big guy on odds when it comes to trading. And first they have to prove they want to go trend early in the day. But once they go trend, well, now I'm strictly going to be on that side until they prove that something changed. So as the profile's evolving throughout the day, that's what I'm looking for, like an afternoon rally high. Today was a perfect example of it, and I didn't take it. We rallied, I think it was in G period, and ES just missed filling a set of single prints, and NQ had. And I was waiting for ES to fill theirs to take the short. Well, they never filled them, and that was the high of the afternoon. That, you know, so those, I love those type trades, afternoon rally highs, afternoon pullback lows.
Yeah. So when you're sitting in front of the screens, it's more of a matter of maybe to keep that balance of following process and having, you know, some rules in place, obviously, but also being discretionary. Before you make decisions, do you have like almost like a mental model you run things through of, hey, I have an idea for this, but everything's telling me this, so that's a stupid idea. I'm not going to, you know, entertain that. Or is it just a process of, yeah, or I guess what I'm trying to get at is I myself trade very discretionarily. And I think that if you're learning a discretionary type process, especially, which I think it's the only way forward, there's no reality where you get to just follow rules and trade mechanically and do well as a day trader. I just don't believe it. So to make that balance of trading with discretion, but still following a good process, is it something that you have outlined, or is it something that you just intuitively know because you've been doing this for so long?
Well, I think I'm trying to think. It's like a chess game. I'm trying to think 2 to 4 moves ahead. So as the market's moving, I'm looking for what my next move is. So even though I might just be sitting there and not doing anything, and like even on a slow day, my room's like, oh, this is boring. I'm like, well, it might be boring, but what you should be doing right now is saying, if this happens, I want to do this, and if this happens, I want to do that. No matter how boring it is, there's always going to be opportunities without you looking for them. So my strategy throughout the day is trying to think 2 to 4 steps ahead of what the market might do. And that's basically that's my discretionary way of looking for my trades.
And then just wait for the market to confirm and set that up for you.
Mm-hmm.
What do you think of the volume profile?
I was never a big volume profile trader, for 2 reasons. Number one, when I was trading options in SPY's volume is incredibly heavy. And the volume was always misleading because they had big openings, they had big closing prints, there were big prints throughout the day. So it always distort the volume profile on the SPY. So that's when I switched to futures, I was always, a TPO guy. I still think I like watching the volume profile develop, but I still think TPO to me is more important. And today's a perfect example. The volume the volume POC in ES today stayed up at, I believe, 20 in ES. The TPO came down to around K's high. I forget exactly what price that was. That was huge to me because that's one of the things I was looking for. I talk about looking 2 to 4 steps ahead. I said, if this TPO gets lowered here, it was literally like 3 or 4 points off the day's low at the time. I said, it's impossible not to go lower on the day if the POC stays here. That would mean trading in a 4-point range. That's not going to happen on a day like today. So either that POC is not going to stay down here and it's going to go back up where it was, which I didn't think was going to happen, or we're going to make lower lows. Mm-hmm. And that happened. So I got confirmation on that. If I was strictly a volume profile trader, I'm not sure what I'd do at that point. Volume profile is still all the way up. So that's why I love looking at it. I like to see it develop, but I don't use it in my trading as much. Mm-hmm. You're a big volume profile, right?
Yeah, exclusively. I actually don't use the market profile at all. Yeah.
Now, are you trading the ES? Did you trade the ES today?
I did, yeah.
Okay.
So in a situation like this, I would be very intuitive to I don't need the point of control to shift specifically to understand that we are really liking these prices and to understand that we're, fully getting acceptance down here. Once the actual shift happens, it's great, but I don't need it to happen like that.
Okay.
Yeah.
Because
But
I'm
interesting.
wondering if there are some people that are like that, and they're like, well, it's not shifting. So now the odds are maybe we will go back up to that volume pop. And on a day like today, where all the MGI is so skewed to the downside, the odds of that, I don't think, weren't good at all.
Sure. Yeah. No, I think interpreting the volume profile intraday takes a certain level of mastery over that tool, because it is very, I think, intuitive, and the information can change very quickly. And it's not it's much more refined than what you would see with like a market profile, which is a little bit less granular. And if you don't know what you're looking there, you can just misinterpret everything you're seeing, or not give it the importance it needs, maybe because it didn't actually shift. So yeah, very good. When you're thinking about trading futures, kind of a risk management question, do you think it's very important, given the size of these and just the nature of the futures market, to break down your risk parameters and always position yourself with the same amount of risk for every trade? Or do you think there's wisdom in, if you would consider a setup to be a little bit better opportunity, or a little bit more of an A+ type, where you would use more size on this trade than on this one, or potentially some type of a dynamic strategy where if the day's going smooth for you, you seem to be in sync with what's happening, you start increasing risk as you go? Do you have any thoughts on a right or a wrong with that, or do you think it can just depend?
I have a lot of different risk parameters. Sometimes, like on a day where the market, I'll use one time framing as, to stop what I was doing. So if the market was pretty much going up or down straight, I'm looking for that one-sided trade. Once the one time framing stops, I stop and I reassess. So when I'm saying, like on today's a perfect example, when you're getting distance away from prior time frame lows, just like on any chart, that means the trend is still young and the odds of going lower are better. Once that starts lessening, so if one time frame now, if you were getting 10 points on each time frame below the previous time frame's low, now all of a sudden you only get 3. Next time frame, you have an inside bar. Something's changing there, right? The selling's drying up. The odds of stopping a one time frame and getting better. So I will definitely cut down my size when that's happening, because it's telling me it's drying up. And if I am still short, I will put my stop now right above the previous time frame's high, like by 2 points if they stop the one time frame. And that's one thing I'll use. There's others where, like afternoon rally highs or pullbacks, that's kind of an innovative trade because you're going against the grain right there. But if you think the market's just rallying because it was too short, I'm looking for a level, whether it's half back, value high, to really lay into it. But I might not want to miss it if it doesn't get there. So I might put on a 1 or a 2 lot, say a couple of points ahead. I'm actually hoping to be wrong on those first 2. So it does go up and I could put on another 4 or 5 where I really want to. But at least if I have the 1 or 2 on and it doesn't get to the level I want it to and it rolls over, at least I'm still involved and I made some. So my stops and everything really vary on different things, whether it's a firm stop above one time framing stopping, or it's just that, what, I don't like this, I don't like this, I'm out. It might not be anything. I'm not getting what I want out of it, or I feel the market's changing and, I just want out. The one thing I tell my room is you need to have stops in. You absolutely need to, there's 3 things to a trade. Why you're getting into that trade. You can't just say I'm taking a trade, for no reason. Number 2 is before you place the trade, where is your stop? And then number 3, where are your targets and destinations? Whether it's 1 target, whether it's 2 targets, it depends on how many you put on and how many targets you have. So if you don't have those 3 things, you shouldn't be pulling the trigger.
No doubt. Let me ask you your thought on this.
Sure.
When you're trading, let's say futures, do you think it's better to master a very small amount of products? So the S&P, get very well intimately familiar with how that product rotates, with stats like overnight high and low, the likelihood of one of those getting broken or both. the initial balance breaking and how far it usually, you think it's like obsessively just kind of like really master and get very familiar with a product that you can trade anything that it gives you, whether it's a trend type of a day, if it is a balanced day, whether it's a volatile, balanced day. You can kind of do whatever you want because you just trade that one product or maybe a few, whatever it throws at you. Or do you think it's better to learn a method that might be better suited for when the market is trending, or in most cases, maybe better suited when we have established value and you're doing those outside, type back in trades, or even better said, figure out for you, do you do better joining the action, or do you like those type of, we're in balance outside back in trades, and then learn a method that caters to one of those and apply that to 13 different products and try to see which one of those products are shaping up what your method likes.
Okay.
Very long question, but I think the simplified it. Do you think it's better to master a couple of products and trade whatever that throws at you? Or do you think it's better to understand what you're more comfortable trading, whether that's joining or fading, and look for products that are setting that up day in and day out?
So when I sat with my friend in 2011, first thing he said to me, well, what do you want to trade? How many stocks do you want to trade? I said, I don't know, 4, 5, 6. He goes, how about one? And I looked at him and I go, what do you mean? He goes, what I'm going to teach you or attempt to teach you and educate you on with the profile and everything else, with the kind of work you need to put into it. If you try to do this with more than one, you'll probably blow a gasket. And he was right. So I learned first SPY and now ES, trying to learn it like the back of my hand. Learn the little intricacies with it, the little nuances it gives you. One thing that I've learned with ES is it has a tremendous habit of front running the overnight high and low. NQ doesn't, neither does righty. Little nuances like that. Now, I have started trading NQ also, but I don't know it nearly as well as the ES. So short answer to your question, I think it's better to learn one, maybe two, like the back of your hand. I don't care how, if you pick the ES or the NQ or both of those, there's going to be plenty of opportunities in just those two for any trader. For any trader. So I would keep it to a minimum.
Okay. Through Camelback Trading and through your time on the screens, you obviously deal with a lot of traders, retail traders, aspiring traders. What would you say is, I'm sure there's not one simple answer, but what would you say are some of the commonalities, or maybe like this is one of the biggest things traders are struggling with?
Definitely fear and anxiety. I try to tell them the way to combat that. You're never going to get your temperature down totally. I said your mental reserve is just as important as your capital reserve. Once you blow that, it doesn't matter how much money you have. Once you blow your confidence, it doesn't matter. You're shot.
Yeah. I
said to alleviate the anxiety, the fear. I don't even like to use the word fear, but anxiety. If you do those things we talked about why you're placing the trade, where your stop is, and where your targets are, that should eliminate. It should eliminate a lot of that anxiety. You know your risk already. If you paid 25 and your stop's at 20, well, you have a 5-point risk and you're looking for 35 and 40 on 2 targets, for example. Well, if you get your first target at 35, if you have a 2 lot, you just made 10 points. Now you can raise your stop either to break even or even to 30. So if it gets stopped, you made money. And if it does stop you out right off the bat, you lost 5 points. That's the biggest thing to try to get into traders' heads. Even on days like yesterday and today, sometimes traders look at price too much. This market, we went down too much today. I missed it. No, you didn't. Sometimes I tell them when we're looking at the profile, don't look at the numbers on the right. Just look at the profile. What is the profile telling you? Well, we're one time framing down. What else? We have single prints. We have lower value. Point of controls being lowered. We're down 1%. I said, isn't that more important than price? You know you're wrong once something stops, when the one-time framing stops. So those are the things that are the biggest things to try to get into traders' head, to try to change.
It's interesting. I hear a lot that the trading psychology, and I need to really work on my psychology, and a lot of these emotional type struggles that I think are very important survival instincts that are flaring up. Because to your point, people are making actions. They have no idea why they're doing it. They don't really know how much they're risking. They're stepping into an environment where they are getting ready to get hurt, just as if they were to step into like a fight. And these feelings of emotion, they should be there because they're warning you, like, you're doing something very dangerous and you shouldn't be doing this. You're not suited for what's getting ready to happen to you. And it's not, you don't need to work on your mentality. If you tactically had a process and a method you're following that actually gave you some type of an edge, and you didn't have all these questions, all those, 80% of these things would just disappear. They would fix themselves,
Absolutely. I watched the video you did, I think, today. So it was totally about what we're talking about why traders fail and what could be fixed and what can't be fixed. Was that one. And it's so true. I'm like, look, people hear 85-90% of traders fail, and it's horrifying, and it is horrifying. But that's because most people don't take it like a business. This is my business. This is a job for me. Now, I know a lot of people in my room and other people that trade have full-time jobs and stuff. I give them incredible credit to do both a job and to trade part-time. That's very hard. But if you are trying to make this a living, you better approach it as it's your business, and you have to take it serious. And again, I think it sounds so easy, and it's not easy. I find myself, I've had my confidence rocked, and I've been doing this a long time. But if you put those stops in and let the temperature calm down and let the market do its work, okay, if you're wrong, you're wrong. Now, if you do the same trade 5 times and you get stopped out 5 times, well, then maybe it's a bad entry. If you get stopped out the first time and you lose 5 points, but then it comes back again a couple of minutes later or 20 minutes later, like, I still think this is a decent setup, and you do it again, this time it works. Well, you lost 5 points on the first one, but now you make 20 points on the second one, you're ahead.
Yeah. It's very easy to put so much importance on one trade. And this is one of, hundreds and hundreds of trades that we make. And I think it's interesting that the reality is kind of like every day is just one of however many days we have with our life. And most days are just kind of normal. You have these days where you get married or you have a kid or something, so like blowout days, but most days are just like your life. And I think in most of our trades, they're just trades. Some fail, some work. Every once in a while, you get that one that goes, 6, 7, 8, 10x your risk. But, most of them are going to go partially. You're going to get some scale outs. They're going to flip around and you're not going to get the whole thing off. They're just like, and if you put that importance that this trade has to be this, or you're trying to make just a normal trade something super, it can lead to so many unnecessary frustrations.
I think a lot of traders, every trade is like that.
Sure. Yeah.
And that's not healthy.
No,
it's just not healthy.
No doubt.
Look, consistency. I always tell people, consistency builds confidence. Consistency isn't making money 10 trades in a row, and then on the 11th trade, losing all that money and more. Yeah, your win rate was great, but you're down money. It's just every day, and it doesn't matter the zeros. People, what could you make? How can you do? It doesn't matter. Whether you want to make $100 a day, $1,000 a day, 10,000, whatever, it doesn't matter. It matters what you want to do. I think a lot of traders put pressure on themselves, seeing what they think other people do, and most of the time it's BS because they look at. That's why I talk about social media and it having a negative effect. You think most people on social media are telling you the truth?
No,
there's no way. It's just not. I think that's a big fault I have of mine. I tell on my videos, I say whether I had a good day or a bad day, and I'm giving why. I think explaining why I lost 80 points in NQ on Monday is a good reason to, is going to help people. They're going to learn more from that than from my winners. Again, it's not about my trading. It's about teaching them the process and trying to educate and inform them.
Yeah, this just keeps needing to get, it needs to be screamed from the mountaintops of just what we do here as traders, and especially people that are committed to this, and this is what we do, that reframing this idea of it was a good day or it was a bad day because of my P&L, but it was a very good day because I performed well and I followed the plan and I didn't do anything that I was, I didn't do anything crazy that I wasn't supposed to do. And maybe the market wasn't as favorable today as I would have liked, but or maybe today was wildly favorable, and kind of really reframing what is good, what is bad. And you know, if you can get there and stand by your decisions and know why you made them, and stay within your risk parameters, you know, these are still good days, regardless of what the, you know, P&L says. So, Paul, let me ask you this. If somebody wants to find out more about you and maybe tag along with the journey, where would you tell somebody to look you up at?
A bunch of things. So I'm on Twitter, at Paul Asmar and the number 5. And the only, I mean, I hate social media, but I'm on it because I try to help people and build my business. I'm on Instagram at Camelback Trading 2724.
Okay.
People could email me, paul@camelbacktrading.org. That's easy enough. Or they could visit my website, camelbacktrading.org, which, you know, gives what we offer and stuff. That's pretty much where I'm on YouTube on the Paul Asmar.
YouTube.
So I put out a morning video every morning about 8:15, and I do an afternoon video that's out about 4:30. I try to keep the morning video short, 3 to 5 minutes. The afternoon sometimes runs about 10. So that's where I'm at.
Well, there it is. Listen, if you're very accessible, so if somebody's not following along, it's just their own fault. You're putting it out there.
Exactly.
Very good. Well, listen, we'll make sure all that's linked in the description for sure, just for easy access if anybody wants to, you know, follow along with you. I know we're out of time, but I really enjoyed sitting down and just hearing from you. And I think that there was, as you talk, you probably don't understand, so many of the things you say are just very impactful, and they're just very wise. And for anybody who's listening, and if anybody's paying attention, there was just a lot of things you said that were very great. And so thank you so much for the time. Thank you for being with us. I'm going to pause the recording and then I'll say goodbye to you proper, but we can say goodbye to everybody and they can look you up. Everything will be in the description. So thanks for coming on.
Thank you very much.